Okay, my name's Connor. I'm a lettings negotiator from Belvoir Hitchin. We're here today to go through a Belvoir seminar. We're going to cover a few different things today, which is remortgaging, the Rent Reform Act, the taxation. So if you come through the front door, we've got pillars either side. There's going to be screens where you can input your reg. Make sure you have done that already. If not, in the interim, just make sure you don't get a car parking ticket. Fire exits are to the left and right hand side as you come in. And without further ado, I'm going to pass over to our director, Devinda Gary.
Good evening, everyone. Welcome to this landlord seminar organised by Belvoir, Hitchin and Stevenage and Belvoir, Welwyn and St Albans. I'd like to first thank you all for taking your time this evening to attend the seminar. Our aim is that you will hopefully be able to take away something from this evening and you will find it useful, and this will help you with your own properties. Belvoir, Welwyn, Belvoir, Hitchin are run by a team of 30 members of staff, and they are here this evening, most of them. Without them, I would not be able to give the sort of service we give out to our landlords, and I think the most important thing is that I introduce them. Some of them are not in this room, but I'll start with the people I can see. I've got Lisa Green, who's the lettings manager in Welwyn. Lisa, please stand up. Thanks Lisa. Chelsea Garrett, who's the senior manager in Welwyn as well. There's Stephanie Powell, who looks after the Hitchin office, who's the lettings director there. And then there is Jan Furness, who's the sales director in Hitchin. Please come in, Jan. Please show your face. Stephanie, please stand up. Say hello to everyone. If you've got any questions about anything, about the properties that we manage, or you've got a question about anything about your portfolio, these are learned people, they're extremely experienced. Feel free to have a chat with them during the drinks. Private renting has existed for centuries. In the latter part of the 20th century, the government built social housing and tried to increase stock of affordable housing. This trend was slowly overturned by government policy in the 80s. In 1980, according to statistics from Statistica, 43% of households were renting a property. Of that, the government provided 75% of the housing. In recent times, that figure has gone down to 36%. So 36% of are renting properties at the moment. 45% on social housing and 55% are with private landlords. And that's you and me. We, that is landlords, private landlords, provide an important aspect of housing to the market. And whilst it should be the intention of the government to provide safe and adequate housing to tenants, it is more often the case that vote winning takes precedence over true policy. And as a direct result, we have seen massive changes to the private rented sector in the UK over the past decade. To put things in context, I rented out my first property under my father as a youngster. I was about 20 years old in probably around about 1990, and the whole lettings process involved 3 documents that needed to be signed, and it was pretty straightforward. Today, you could be signing up to 15 or 20 different documents to get a tenant into a property. And whilst it did get easier at one point to get a tenant in and to evict a tenant, it is now becoming more and more cumbersome. Property values have also risen in the last 20, 30 years, as far as I can remember, and they're likely to continue to rise in the next few years. Why? The inflationary impact of increasing building costs has not fully had its impact on property values. This takes time to feed through the system. So what you're seeing at the moment is your property value is not the true value. The true value is probably considerably more. This naturally means that more tax is going to be payable at every stage. We at Belvoir decided that it was important to hold an event where landlords can get an understanding of the most pertinent issues that they face. One, we need to understand what is going to take place in the next couple of years in private renting. At the same time, landlords need to be aware of the tax implications of their assets. What happens when they sell them? What happens when they get inherited? Deposits is another very key area. We take 5 weeks deposit from tenants when we rent out a property, and that deposit is then administered by a government-sponsored scheme. Usually the deposit represents approximately 10% of the value of the rent received in a year, and this can be the difference between making a profit or a loss. Mortgages. In this turbulent and inflationary period, interest rates have been rising for some time, and it is vital financial planning to understand what the market offers and what is expected in the coming months. Many landlords are still thinking of buying more properties. On a personal level, two of the speakers this evening I have known for some time. Sati Verdi, who's a tax expert, advised me when I was buying a business. I'm a chartered accountant by profession, and believe it or not, even I have to take tax advice from an accountant because things change so radically and so quickly. Grace Miller, the operations director at Belvoir Central Office, is also going to be speaking this evening, and she is a wealth of knowledge on the subjects that I have stated. I have found both of them to be informative and experts in their fields, and that is why I bring this seminar to you this evening to share a wealth of knowledge. The first part of this seminar is going to be run by Jennifer Melville and Dan Moore, who are from the Mortgage Advice Bureau, and let me pass you over to them. Thank you very much.
Can you hear me at the back without the mic? Is that all right, or is it better with the microphone? All good? Got a loud voice, so I'm sure at the best of times, folks. So, lovely to see you all tonight. I'm just going to spend 15 minutes just talking through a few of the mortgage situations that's out there in the market at the moment. What I look to cover off is who are we? Give you a bit of an update on the market and the opportunities that are still out there. There's always opportunities, and also to look at remortgage options. So who are we? Mortgage Advice Bureau. Got over 90 lenders and 12,000 products, circa 2,000 advisors across the length of the country. So whether you're in any part of the UK, we can help. 200 awards and counting. There are only a limited number of awards that are out there. Hopefully what that says to you is if you come and speak to us about your mortgage, you're in safe hands. You're absolutely vital to our business. So anybody who comes and engages with ourselves and the advisors that we have underneath us, you can be guaranteed that you'll be looked after. We get exclusive products. Some of them you can't get if you go direct to the lenders yourself, which is great, shows on our system. We're also able to place non-standard cases. So what do I mean by that? Aside from your typical residential buy-to-let mortgages, we have people come to us, I've got a flat with a shop underneath it, it's one unit. A lot of the high street estate agents can't place that because it's classed as semi-commercial. We can. If somebody comes in, there's bridging situations, looking self-build. If you find something from a development perspective, you're all investors. So if you see something from a development perspective, we've even got lenders. If you come to us and say, they've got this opportunity, or it's perhaps land I don't know what to do, they'll guide you through all the steps on that so you can make decisions, and it's just there to support you. You'll have your own dedicated advisor, who's Brenda. Brenda's, again, been in the industry for a good while, wealth of experience, worked with a few of our branches now. Feedback we're getting is fantastic, but don't take our word for it. Give her a chance. Go and have a chat.
We've got Brenda's contact details with us today, so if you'd like to come and have a chat with us, please just pop on a tea break and we'll be more than happy to pass over the contact details afterwards.
So just an update on the market itself. Average age of a landlord is 49 years old. Average LTV at 50%. So even though people are saying the market is in a strange state, certainly the mortgage market at the moment, with an average LTV of 50%, that's great. From an investor's perspective, you've done the work and it's paying off. 63% of landlords got at least one buy-to-let mortgage, and the stats are showing us that over the next year, 30% of those borrowers will look to remortgage. This is an interesting little stat here. 65% of landlords have increased rent in the last 12 months. For any of you that haven't looked at that, if you've been looking at doing it yourselves, come and speak to the experts. Speak to the letting agents, they'll have a chat with you, they'll help you with that side of things. This is why using the experts who know the local market and the field is great, because if we can get your rents up, we all know that interest rates have gone up. If rents go up, there's a compensation there to be had. Average rent increase in England year on year, according to the Office of National Statistics, is plus 5.3%. It depends on your area. I hear some people tell me it's way over 10, 12%. It really does depend on where you are. But I always like to use ONS stats because that's what they're there for. So I want to touch on portfolio landlords from a lender's perspective. You're all landlords, you've all got portfolios, whether you've got one in it or whether you've got 31 in it. But from a lender's perspective, a portfolio landlord is looked at in a different way. Because of PRA regulation, which came in back in 2017, what it means for portfolio landlord is the lender has to look at both the individual transaction and also the portfolio as a whole. So, on the back of that, how do they class whether you're a portfolio landlord or not? And the description is a portfolio landlord application is where the customers have got 4 or more mortgage buy-to-let properties, including the new transaction. The example I always use, we've got 2 applicants. Applicant 1's got 2 mortgage buy-to-lets. Applicant 2's got 1 mortgage buy-to-let and they're about to buy another with a mortgage. The lender will treat those as a portfolio landlord. Now, if we got applicant 1 with 2 mortgaged, applicant 1 had got no mortgage but they've got 10 unencumbered properties and they're about to buy another, even though there's more properties, they're not classed as a portfolio landlord. It's all to do with the mortgage risk. So you might all be aware of that. Certainly when I've said this before, there's been a bit of a mixed bag of knowledge in the audience. So why am I telling you that? When you come and have a chat with us, hopefully you will, if you're in that situation, you now realise that you are what a lender would class as a portfolio landlord. To help us help you, bring the copy of your credit file in. Nobody's doubting your creditworthiness. You're all investors, you've done very, very well to get where you are. But our advisors need to complete a portfolio information form. There's a number of different names for them. You can see them up there. The reason if we've got your credit file, we can then make sure that when that application goes in, the details we put forward are exactly the same as the underwriter's going to see. Why does that make a difference? If any of you have done a mortgage recently, you'll realise that service standards and turnaround times are slightly longer with some lenders. It's just got some very, very good ones, but slightly longer, just because of the market we're in. What that will let us do is place your case with the right lender first time. Because best case scenario, if we haven't done this and there's one missing, the underwriter will get that report, one the high street's missing, pings that back to the sales team, they contact the advisor contacts you, and you go, I've had it for 20 years, it's unencumbered, why do you need to know that? We then go back to the lender, but that's a week, 2 weeks worth of time wasted. We don't want to. We don't want to waste your time. Time is money. The worst case scenario in a situation like that is it could take it outside criteria. It means we've got to start the application again. Again, we're here for you. You are our customers. We want to make sure that if we're working with you, or you're coming to see us or any of our advisors, we place you right lender first time and get your property through as quickly as possible. So, updating the opportunities as such, 35,000 customers coming to the end of their 5-year fix by the end of Q4, which is the end of this month. Due to the fact that back in 2018, 84% of landlords chose a 5-year fixed in Q4. Purely because, as it says there, really competitive rates. There was very little difference between the 5-year fix and the 2-year fix. And remember, we didn't have to worry about ICR calculations, so it didn't impact on borrowing or affordability. We expect that trend to continue into Q1 of next year as well. So again, if any of you in that situation, if you've not looked at your remortgage options at the moment, it's a fantastic time to do it, and I will explain why shortly. If you consider, and again, if any of you in a situation where your rates are coming to an end and you've looked at what your standard variable rates are, they've shot up. Certainly since the economic hand grenade that Liz and Quasi chucked in nearly a year and a half ago now. Reversion rates with Monmouthshire Building Society, which I struggle in pronouncing, are the lowest at 6.99%, up to TMW, so Mortgage Works at 8.49%, and Birmingham Midshires at 9.59%. Why do I mention those two? They're the 2 biggest players in the market at the moment and have been for a number of years. So there's plenty of landlords, potentially, with a property that will revert on SVR to one of these 2. What we're seeing, and feedback from the lenders, And again, you may say differently, but certainly we're seeing that landlords look at 2-year fixes becoming popular again in the market. While the rates are at a higher level, secure the best deal you can get, review your options in 2 years' time, so there's not an extended tie-in, and then when that deal comes to an end, we're looking to make sure every time you're getting the best deal that's out there. The general theory or thoughts out there from the lenders are over the next 18 months, 2 years tops, we'll continue to see rates start to come down. Obviously nobody knows what's going to happen economically, but that's what's out there from the heads of lenders that we're speaking to. So reasons for becoming a landlord, any of you that are good at maths will realise this totals over 100. So this is where people have ticked more than one box. The number one reason hasn't changed. It's a preference to investing in property, because over time, equity growth comes in. Market's always done that, starts down here, peaks, drops, and goes up, and it's done that since records began. Don't see that changing at all. So I'm sure most of you in the room here are in it for the long term. That long-term gain is still going to pay off. Where we've seen things get a little bit trickier is in the contribution to pension supplement income. And this comes back to the previous slide I was saying, where people come to a standard variable rate, have been looking at their options, maybe a little bit nervous about what's out there. I'm going to show you in a minute why you don't need to be nervous. It's still a really good time, and we can certainly help you moving forward. Which leads me into this. So why remortgage now? And again, different areas. This was an area I did this for, and a bit of survey. We looked at house value, average house value of £200,000 portfolio, 75% LTV, so we've got a mortgage of 150, portfolio of 4 properties. I've took a rent of 845, it was previously 800. The reason I've gone for 845 is that it uses the ONS increase I talked about earlier. Giving us a rent of 3,280 for 4 properties per month. I talked about the variation in buy-to-let standard variable rates. I've just bought TMW and BM Solutions. As I said, they're the 2 biggest hitters out there. So if we take the cheaper of those rates, which is TMW, that gives you an interest-only mortgage payment of £1,061.25 per month. Now, TMW's SVR, if we go back pre the economic situation that we came in with the mini budget, that mortgage would have only been £655, so you can see how much SVRs have gone up. So if we've got 4 lots of mortgage on interest only, gives you 4245, take the rent from the mortgage, that landlord's now making, when they go on to SVR, if they've gone to it, they're now making a loss of £865 per month. We don't want to see any of you in a situation like that where you're worried about what's coming. You know, we've spoke to landlords who just looked at their KFI, their mortgage offer, and panicking about what's coming up. There is no need to panic, there's good news. Davinda mentioned about the rates having gone up. They have, rates have been going up, but they're coming back down now, which is great news. So the general prediction, as I say, rents were down here. It was almost a false economy. They were lower than they've ever been. They've kind of skyrocketed up. The general thoughts are they've come somewhere back in the middle. And if we're seeing rates mid 3s, 4% around that time in 18 months, 2 years, I think we'll be very happy. I think that'll be a settled market. The rents will compensate by going up and things will kick back into gear. As we stand today, and I did these slides 2 months, 3 months ago, and then again updated these a couple of weeks ago, and the rates have come down considerably. Because when I did this previously, the rates were nearly 6%. We're now looking at 2-year fixed at 5.07%. So that has only got a 699 fee. The previous rate I'd looked at was, I think it was 4.96, but there was a £3,000 fee per property. So you can see the lenders are already starting to get an appetite to lend again, which is fantastic news for you guys. So if we look at the rent of 845 times the 4 properties, that remains the same. But instead of making an £865 per month loss on that portfolio, you're now making a profit of 845. It's almost turned it completely on its head. Is that the sort of profit you'd have been making if we were looking at this 18 months ago? No. It's very much a step in the right direction. Hopefully you can see that's some good news in a market that's been a little bit turbulent. And that is very much it from me today. It was just a short, sweet introduction. If you'd like to come and have a chat with us later on, we'd love to speak to you guys. Thank you very much for your time.